tax changes even in 1.5 hours. But the main essence of this webinar was ignite the discussion. You have heard us, you have heard our discussion of the changes, what have come through. Yes, there are quite a number of areas that needs to be debated, clarified, and see where we are, because a tax is a system that all of us, we are involved, and you can never do a business and run away from a taxman, because your rate of tax is 30%. So in one way or another, TRA is a 30% stakeholder in your business. So it's not a matter of running away. It's a matter of planning your affairs properly and factoring what tax needs to be paid belongs to Caesar. So we come to the most interesting part of the presentation, Q&A. And we'll now hear from the horse's mouth, the enforcers of the tax laws, to see how are they helping us to answer some of the very, very interesting questions. Because even when we answer your questions, we also learn. Yeah, there's quite a lot that we will learn as well. So maybe I'll ask the madam on my right to start taking over the floor from here.
Okay, thank you, moderator. Let me go through. Before I get into answering the question, I just to make some compliment on the income tax when they were saying that there is allowable expenses as far as the COVID-19 is concerned, but that allowable expenses is not to the infinity. So once this pandemic is over and the allowable expenses is ended there. And the second thing on VAT, the zero rating of goods on transit goods, ancillary, initially there was allowed the zero rate up to, after 30 days, if the goods are still installed under custom, then will be subjected to VAT payable. But now there is another extension, not in terms of day, but it says that ancillary services for transit goods, then there will be zero rated as the Commissioner for Customs may authorize. So that is also a privilege, because take an example, the pandemic COVID-19, and you have a consignment at the port which is on transit. They can stay there over 30 days. Now, what should be done? It means, are we going to charge them because the 30 days has expired? They said, no, let us be considerate. So until the number of days, until the period the Commissioner for Customs may authorize. So that is only the things which I want to make a compliment as far as the presentation is concerned. But it seems as if, Ezekiel, do you want to say something? Oh, all right. Yeah, now let us go to the question. Grace asked the question, how is VAT charged on imported goods and why? VAT on imported goods, the taxable goods which are subject to VAT are charged at the rate of 18% at the time of clearance. So when the custom duties are paid is the time when the VAT also is charged. And why VAT is charged? Because we are saying that the destination principle, VAT is a tax on consumption. So if the goods is going to be consumed here in Tanzania, and that goods is a taxable one, then you have to pay VAT at the standard rate of 18%. Then Mr. Boniface, that one I'll leave it to Mr. Matenas. Then there is someone safe.
Mr. Matenas, please, you can answer.
Oh, you want? Let's just say that's your customer now. Okay.
Maybe I could, I can just try to respond to the question, even though the response will not be straight as the Mr. Boniface want to know, because he want to know, I need to know which tax has been charged and at what rates. I think you cannot go straight, but what I can contribute to that is that the rules of taxation based on income. The person has earned an income. As far as he has earned an income, all the rules pertaining the determination of the tax from that income will be followed. So if he is and we know that the man is a businessman, so that is just a transaction. That income will be part of his total income for the year, and he will be assessed based on the rules of income like any other taxpayers.
Thank you, Adam. Now, Mr. Steph has asked, if you are VAT registered, how do you deal with government institutions that have tax exemption on its purchases? Are you subjected to issue receipt from every sale made to them? Okay, Mr. Steph, first of all, if you are dealing with the government, and the government has tax exemption, you know, government is also supposed to pay VAT. Only where there is exemption on specific areas. Let's say if there is the government project which is receiving donor funding, there are procedures. In order to enjoy that exemption, you should follow the procedure. It is not coming automatically. You should follow the procedure. You have to obtain also the pro forma invoice, detailing all the items which you are going to purchase, and the government is the one which is supposed to enjoy that exemption. So you must get also the certificate that allows you to procure, to sell without charging the government VAT. If you sell and you come later, you look for the exemption, you will not be allowed. We want you to follow the procedure. And we want the government agencies, institutions, whichever is going to be exempted, the respective institutions should first obtain the exemption certificate. Because sometimes the government, we as a government, we are compelling taxpayers to pay VAT unnecessarily. Because let's say there is a construction, and that construction is exempted. You know that this is a government institution, the project is exempted, but we are telling the taxpayer or the contractor, if you want a job, start doing. They can start mobilizing the resources because they don't want to lose the job. But when they are mobilizing, they don't have any certificate granting them that the material will be exempt. But the government institution can tell you that you just proceed, we are going to secure for the exemption. And the institution failed to obtain the certificate, because within 30 days, you must make sure that you obtain that certificate. Failure of that, don't accept it to undertake the activity with the government or government institution without having that certificate at hand, because that certificate is the one which is going to allow you to procure whatever material free of VAT. If you procure, then exemption to follow will be subjected to pay for that one. And unfortunately, when the government will be paying you, if you raise with the VAT, they will say that we are exempted. We are not going to pay you the full amount. So make sure that you obtain the certificate first.
Maybe
Are you subject to issue receipt on every sale made?
yeah, maybe I can also add on the part of the exemptions. You know, in the past 5 years, it's where we have started to implement the VAT Act of 2014. So we have experienced that the Act has removed a lot of exemptions as far as if we can compare to the VAT Act of which was present 1997. So a lot of exemption has been cleared out by this act that we are implementing, and it actually helped the government to increase its revenue. Yeah, it helped the government to increase actually its collection from the exemption that were actually ignored during the previous years, and now for the present statistics that we do have, maybe in 2014, the financial year 2014. We are collecting less than 800 billion per year, if we can consider the VAT as itself. But as we are speaking now, it has doubled. We are collecting up to 1.3 trillion from the these areas of VAT. So we can see the impact of exemption on those areas or all those products that were being exempted in the previous year. So it helped a lot because several stakeholders were saying it was not a fine, or it was not good perhaps to exempt. So the government was ignoring some of the money that could be actually being combined or taxed and contribute to the government revenue.
Thank you. Mr. Safe also has asked, are you subjected to issue receipt on every sale made to them? Now here we can look it in two different angles. There are some activities of which it is you are done partly and very often, and at the end of the day, you're supposed to raise yes. So you can issue a bill. Then at the end of the day, you issue one receipt covering all the small activity or small business we have done with the government. Not necessary to issue receipt now, tomorrow, day after tomorrow. No, at the end you issue a bill, then that one is allowed. So that at the end of the day, when they are coming to pay you, what is required here is that upon payment, once you are paid, you have to acknowledge the payment. And the means of acknowledging the payment is the receipt. Yeah. Now, and you can find that sometimes they are saying, okay, you just supply, then we'll pay you later. Now you are supplying, you are raising the receipt. That is not right, you raise a bill. So at the end of the day, when they are coming to pay you, then is the time you issue a receipt, once covering all the transactions. We have a contract amount that is very long overdue from a client, and interest on delayed payments is provided within the agreement. Invoices for outstanding amount for services provided, of course, has already been raised, and the corresponding VAT portion already paid by us, despite non-payment from clients. I think this one we have, Mr. Meyer, I think this one also we have been considering if the claim and the one who made the taxpayer to suffer is the government. And if you have already paid VAT in respect of the service of the contract which you have done, and yet you have not received the money, that means we are tidying up the capital for taxpayers. Now, then the Mr. Mohammed said that, the question is still going on. If we are now to claim interest charges on the debt, how is this treated with the TRA regulation for invoices, for invoice purposes? Are we obliged to issue a tax invoice, and are we then required to levy an 18% on the accrued interest amount? Assuming VAT is chargeable, and since the debt is on old one, are we therefore already in default for not making monthly remittance to TRA on the accrued interest each and every month, notwithstanding that invoice has been raised and payment has not been received and may not be received? In the case of the interest charge, which is the legal tax point for VAT purposes, if applicable? We know that the tax point for VAT, it is at the time when the service rendered, part payment has been made, or service has been rendered, whichever first occur. Now that one is tied in the taxpayers to make sure that whichever first occur is the time for tax payment, the tax becomes due and payable for VAT. And now they are, you want to go? And now they are asking for the first one, they have already paid, but they have not been, they have already paid the VAT, but they have not been paid by the government. And in the VAT now we have a provision where also the government is obliged also to pay if we delay to pay the amount of the outstanding liability. It seems Mr. Mwai, I want to compliment on that one.
Much I understand from Mr. Mohammed, it is the question he posed is whether the payment has been delayed by the government.
Mm-hmm.
How can he account for in the VAT return? VAT Act 2014 under Section 76 provide adjustments, post-supply adjustments, in case there is a bad debt that has been proved and has been accounted in your books of accounts, then you need to pass adjustment note, that is decreasing adjustments. So for if the debts goes beyond 18 months, then you have to adjust for VAT by issuing by passing a decreasing adjustment. And on the side of the customer, also has to do an increasing adjustment because he has enjoyed the input tax. Yeah. So that is the proper way to do in case there is a debt claim which is not paid by the government, and the debt claim exceed 18 months. So you need to do decreasing adjustments, and the customer also need to do an increasing adjustment so as to make the VAT account proper. And whenever the payment is made, whether part, then you can reinstate the amount by issuing the invoice or something like that. That is to address the question for Mohammed. Another question, sorry. Okay, sorry. Okay. Another question is, we are involved in government grant project United Republic and are working as subcontractor to the donor-owned selected contractor based in Tanzania. The contractor within the government-to-government agreement are exempt from VAT. Current own payment when the due from the foreign contractor are having to be applied for specific VAT exemption, while the TRA guidance, see image below. Where is it? While TRA guidance say it is automatically exempt. I don't know who asked that question. Is still Mohammed? Mohammed, okay. Yeah, with regard to the government projects, if you are awarded a tender by the government, normally the government provides government notice. So the main contractor normally is issued with the government notice. So whenever I raise invoice to the government or to his or her employer, if the employer has got the GN, the main contractor has got the GN, then you cannot charge VAT. So the question is, construction industry, normally there is a main contractor and there's subcontractor as well. So for the subcontractor, unless the GN specify that the subcontractors also has been served with the government notice, then he cannot charge the VAT. But if the GN does not specify, then the one who enjoyed the exemption is on the main contractor. That's it.
Yeah, to complement on that, the donor funded, the projects, the government projects, we have the value added tax Exemption Monitoring Procedure Regulation of 2018. So it states clearly from start to finality, from application, the process, and the exemption granted. So I would advise Mr. Mohammed, if you visit our website, you'll find the value-added tax exemption monitoring procedures regulation, and that can guide him clearly. So whatever, even if it is you have the GN, but the procedure should be followed. And there is a time for applying for that one, because before you start, you must make sure that you have notified and apply for that within 30 days before start of mobilizing the resources, so that we can be in a proper way, and also you'll be in a safe side, despite of saying that let me start, then exemption to follow. Most of the government institution who has promised that exemption will follow, they forgot because of exigencies of work. And at the end of the day, you find that the contractors are suffering. And when you come to TRA, you say, the procedure are clear. You didn't follow the procedure, then you have to pay. So I would advise them that though you are given the GN from the ministry, and that GN, you go to the, if it's for procuring the material from outside, you go to the commissioner, but you have to fill the form for exemption. If for local purchase, you have to apply it through the domestic revenue. And starting from the region, from the regional manager applying for that one, then it goes like that one, with that GN which you have been given to evidence that the government is exempted. Yeah. Council Maliwa, I would like to know the procedure for VAT filing. We are filing VAT electronically nowadays. And sooner or later, good things will come. All the returns from cooperative, for VAT and other will be online. And I think this one will eliminate all the complaints and wrong posting of the information. Define withholding tax and the tax amnesty. Yeah.
Yeah, I would like to make a just little addition to council who want to know the procedures for filing of a VAT. We are filing our VAT returns online. If you have any problem with the filing of the return, you can go to the tax office to which you are serviced. You can get all the guidelines on how to file VAT return. But in summary, in filing a return, you must have all documents pertaining to the purchases not less than 6 months from the month of which you are preparing return, with all documents relating to your sales for that particular month. Then when you go to the TRA office, you'll be told how to get into the system, how to insert all those information within the system. Thank you.
Yeah, I was just adding to what my fellow colleague have contributed, is that the procedure is that we are now web-based, and we are, if you visit our web, www.tra.go.tz, you can see filing of VAT returns, TIN, online registration, and so forth. And now we are going 100% filing of the returns. So what you are required to have is your TIN and the IFIN. Once you go to the window for VAT filing, you put your TIN, it will prompt you to have the IFIN, which will come directly to your email. So you will put it as your password and you will repeat it. Then you will access our VAT form as usual if you could come to visit our physical offices, TRA. Thank you.
Thank you, Mr. Maria. Anonymous asked, define withholding tax and the tax amnesty. When we are defining the withholding tax, actually, it's not a new tax. It is an income tax, but it is withheld by the withholder. It is a prepaid tax. Can be on the final withholding tax and non-final withholding tax. When I say non-final, it means that that withholding tax which has been paid by the withholdee and has been withheld by the withholder, for the case of the withholdee, at the end of the year, that one is the credit which is allowed. It can be deducted from the annual income tax payable. And when we are talking about the tax amnesty is just to say it is a relief. It is done on a specific issue for a specific period. Let's say when we introduced the tax amnesty in 2018, you know how it comes to have a tax amnesty. It's the time when the taxpayers met with our Honorable President, and they were asked, what are they suffering from, or what are their views? They say, we have a lot of outstanding liability. They say, tuna mzigo mkubwa wa madeni. Naona, madeni yana adhabu, yana riba. Now what shall we do? We are ready to pay the tax, but we cannot pay tax with the interest and penalties thereon. Then it was decided that the directive were given that TRA, ministry, you have to sit with taxpayers and see how best you can relieve these people from the huge burden of tax. Then the tax amnesty came in. So the tax amnesty is the way of relieving people from paying the tax, not the principal tax. Principal tax should be paid. Only that the interest, which is a burden to the taxpayer, and the penalty also is a burden. But principal tax, it is your obligation. And that comes for a specific objective and for a specific time. That's why you say tax amnesty is not taken to infinity. And people, they were saying that this one is going to be for everlasting, but it couldn't be so. They were given, then after elapse, they were given extension of 6 months. But for those who have already entered into agreement, they were managed to clear out their outstanding. But for those who are saying, let us wait and see, they will extend, they will start, they have been suffering from that. So that's the differences from that one. And when we're talking for, as I said, withholding tax, we have final and non-final. And I said non-final is that you for a tax person who have been, the withholding tax has been withheld, then at the end, it will be given the certificate of which thereafter, when completing their final accounts, they can deduct the amount out of the total income tax payable. Then the difference, the prepaid, the total minus prepaid, the balance is the one which will be subjected to pay. And when we're saying for final, for that one which is for one-time transaction, let's say for people who are paying, for shareholders, they are getting the dividend. Yeah, that is the final withholding tax. What is your take on the Income Tax Act to guide? Compliment you on that?
On a definition of withholding tax. In fact, withholding tax is not the distinct tax compared to income tax. In any tax administration, you must ensure that there is a economic and administrative efficiency in administering tax laws. So withholding tax arrangement is the arrangement, among other things, provide administrative efficiency of collection or administering income tax. So it may be either investment or business. So withholding is just the matter of an arrangement. If we take an example of employment tax, the person who is liable to pay tax is an employee, but it is very costly to collect employment tax through return filing arrangement. So we use a withholding. It's not a tax. It is employment tax, which is income tax basically, but withholding is an arrangement so as to make a tax less costly administered. Okay. What is your take on Income Tax Act to guide the SME progress in Tanzania? Maybe if I understood him well, it's not the issue to guide. My view is that what do the issue of progress of SME or development of SME are taken as far as income tax is concerned? I think that's what I understood. For the case of SME, if you look at the Income Tax Act, there are certain rules of taxing these small, medium, or these small business, which are more convenient and less costly to them. Let's start with the presumptive scheme. The second schedule and the section 4 of the Income Tax Act provide the guidance and taxation of presumptive taxpayers. Now, the recent changes, the turnover for presumptive taxpayer has raised up from 14 to 100. Is that right? So if you look at the income tax, generally the basis of the income tax, as it says, it is income. And in order to determine income, you have to go through accounting procedures, preparing a return, and so forth. But if you look at presumptive scheme, that is a very distinct way of taxing small business which violate the rule of income taxation. That the basis for presumptive taxpayers, it is not income, it is turnover. That's if your turnover ranges from this amount to this amount, this is what you are going to pay. Here the laws tries to minimize the cost to these kind of people, not to have obligation of maintaining documents and filing return, which are more costly to them. There are certain categories of small businesses who are not obliged to maintain a document in that group of presumptive. The other issue is a recent, I think, which is the recent issue which is introduced and supervised by His Excellency the President, vitambulisho vya wamachinga. And it is taken in the tax administration laws, section 22A of the Tax Administration Act. It also provides how do these people, machingas, can be taxed with the lesser amount. The other issue of, okay, of course, I think those are the main two issues which are addressed by the tax laws as far as in a taxation of SME is concerned. I think, Labda, Mr. Mali, you can add.
Yeah, thank you very much, my colleague. Actually, the two major issues which have been discussed by Kobelo, that are the most significant one. But you will see on the cost side, the cost that were these presumptive taxpayers were incurring by taking their records to the tax consultants, preparing, you see, it was costing almost 1 million, 2 million, practically. Yes. But now that is not no more applicable. It means it's no longer a cost to them. So instead of paying to the tax consultants, now the money can go to the government. And that's what the government is looking for. I think that is the major one. Thank you very much.
To remain on that part, under the presumptive income scheme, presumptive tax scheme, there are two things that can be also be taken undernote, and actually these presumptive taxpayer need to understand. Most of them think if they are not keeping the records, perhaps they are going to save some amount of money. But in essence, they are not, it is more costful if they do keep the records and charged upon what they have been recorded. So it is important for them to keep these records so that they can be estimated based on their income and not just the discussion and a tax officer comes and just telling you that you need to pay something which is not actually recorded. So for them need to be keeping their records and where they can enjoy paying tax well and without any problem.
Just to compliment on that, on this SMEs, they also have to know. Under presumptive, we have two lines. For those who are keeping records and those who are not keeping proper records. And for those who are not keeping records, there are limitations. If the turnover is 14 million, they have to buy electronic fiscal device. So we will be getting their turnover through the machines. And on the other side, you can see if they can just keep simple records, they'll be paying according to the in percentage of their turnover. So if you take an example for a person who is supposed to pay 100,000, and if we can keep records, he will be paying 3%. He will be paying percentage of the difference between the minimum, which is not taxable. Let's say if the maximum is 7 million, you deduct 4 billion, which is, then you charge the percentage on turnover. So it is ideal to keep proper records, whether even simple records, provided that they can be taken for enabling the tax officer also to make decision or to raise assessment. And also they are not restricted even to prepare final accounts. They can. If they want, you can. And if you prepare, the advantage is that you are going to pay according to the profit which you are going to get instead of turnover. So you'll be paying according to the business, trend of your business. Julius asks, is interest from banks taxable? We can look the interest in two angles. If it is interest on loan, that is allowable expense. And if it is interest in respect of the money which you have saved, that is an income to you. So that one will be subject to tax. So when we are talking about the interest from banks, we can look in two angles. Is it for the loan you borrowed? That is allowable expense. If it is for income for the money which you have saved into a bank, that is an income and that should be taxable. And the rate is also declared in the anonymous. What if you have already submitted annual returns, but no withholding certificate or transfer pricing certificate was requested by the authority? Should this person be worthy? First of all, when we are talking about the withholding tax certificate, if you have been, the amount which you are supposed to be paid have been deducted by the withholder who has been paying you, the first thing, make sure that he has your taxpayer identification number. As soon as they deduct it from you, they have to remit to TRA. When they remit to TRA, they have to remit with your corresponding taxpayer identification number. So that amount will go straight to your account. If you are not given the certificate, if yourself, you will not be able to see whether your money has been remitted to TRA. So the first thing, if the withholding certificate, you are not given the withholding certificate in respect of the amount which has been withheld, that certificate you can also print yourself from our system if that amount has been paid to the government. If the amount has not been remitted, you'll never be in a position to see the certificate.
What about certificates from the old system?
You want to answer?
Yeah, the good thing now is that this the mode of operand for the withholding tax now is online. So as it has been spoken, everything is, you can trace it from the system. And it is good to have the TIN, as it has been explained. And you can also generate the certificates. So the withholder and withholdee can see the certificates. Now, if you don't possess the certificates of which the TRI auditor can ascertain from the system, it means cannot give you the allowance. And I think that's what the question was, the anonymous person was asking, what will be the treatment by the TRI? It means it will be disallowed if it is non-final withholding tax. And if the transfer pricing certificates are not there also, Madam Zainab explained very much when he was talking about transfer pricing. And since we are now going to that process, because I think after this Finance Act 2020, most of the things, and we are now going 100% online. So I think this such behaviors, and which actually people were getting money without fulfilling the procedures, will go away, and therefore we will have actually expanded the tax base. And I'm sure anyone who is not going to comply, I think he cannot complain that TRI is going against. So it is better for the people to comply. Yeah. I think question number 10 is also anonymous. How do we record purchases from small scale people don't have VFD machine or receipts? We have seen people who are getting income below 14. They are not liable to purchase EFD machine. So when you are making purchases from small business taxpayers, make sure you get the manual receipts, the usual manual receipts, the cash sales and other similar receipts. Do NGOs also have to have EFD machines and use receipts for paid services they provide for sustainability? We have seen EFD is nothing special. It's just a system change. We are migrating from manual to electronic. Yeah, so the requirement is the same. There are NGOs which are doing both business and non-business activities. So if you are doing business activity and your turnover is above 14 million shillings per annum, the law requires you to make use of the EFD machine for every single sales you make. Otherwise, if you are not doing business, then there's no need to, you just continue the other. Because the motive behind for the usage of EFD is to monitor, is to have a transparency between the taxpayer and the TRI who are enforcers. And even when it comes to tax determination, it becomes easier because it is actually system-based. If anonymous 12 question, if the company is making a loss, do you still need to pay income tax? I think the Finance Act 20, actually since the previous ones, there is alternative minimum tax nowadays. If we are making a loss for 3 years consecutively, you have to pay the minimum of 5% basing on the turnover. 0.5, 0.5. Yeah, I think I end up there.
Look for the question which we can share, not necessarily to start with masala.
Now, question number 14. I am not sure whether whether VAT rate is changed from 18 to 15.
No, it is for Zanzibar.
For Zanzibar, it is where it is changed. It's now 15, but for Tanzania mainland, still we have two rates, 18 for local supplies and 0 for exports.
Since Zanzibar is our neighbor, then possibly we'll borrow something from them.
Question number 15. Question number 15. In construction, the 5% on 40% withholding tax regularly exceed the tax amount due at the year end. Thus, rarely do we end up paying below 80%. However, since there is a penalty for paying below 80%, should be there an incentive or bonus for regular overpayment? Yeah, I would like to answer anonymous this way. If you pay tax, that withholding tax is just an advance tax. So at the end of the year, when you file your tax return, if it's not final withholding tax, you'll have a right to have a tax credit. And if the tax credit is keep on moving, is accumulative, then you can ask for refund to the commissioner. You can apply for it, and then you can, some do apply and use the credit to offset the future tax liability. So maybe that could be a good bonus. So whenever you pay over and above, you can apply to the commissioner, and then the commissioner can vet such a refund. If we prove that is a excess, then you can opt to use such a excess amount to offset the other liabilities if they might occur in the future. But as of now, there is no such a bonus. Another question from anonymous: how do we actually pay stamp duty? Yeah, Stamp Duty Act 1973, I think, provide procedure for payment. Now the question is, if I have lease contract for 9 years, do I calculate 1% of annual gross times 3 dutiable period and pay once, or should I pay 1% gross after every 3 years? I would like to answer as follows. When you have instruments like a contract, a lease contract for 9 years, the stamp duty that you need to pay is only 1 year. For example, if you have a contract for 10 years and the lease payment says 10 million, the stamp duty that will be subjected is only 1 million. Then you apply 1% only for 1 year. Then for subsequent period, you will not be subjected to stamp duty, unless in between you change the contract. If the terms of the contract change, then you can pay for that. But if the contract remained the same for 9 years, then you'll be subjected to a stamp duty only for 1 year. Then for the subsequent year, you don't need to pay. Question number 17. Why is it important for the main contractor to notify TRA by way of letter on every subcontractor they appoint? This is unnecessary burden. In any case, each subcontractor is TIN registered and are required by other regulation to obtain CRB and other regulation. If I can recall, I think this was effective 2017 Finance Act. Yes, 2017 Finance Act. You know, the construction business involve a big amount of money, and the government want to keep track whether this subcontractor or this contractor, they are complying with the tax laws. So whenever you are dealing with such a transaction, you need to notify TRA so that commissioner can keep a close eye to make sure that every payment or every transaction tax is being paid properly.
Compliment on that.
Yeah.
This is the requirement of the law, not only for tax administration, even for procurement. Even the government want to know they are spending a lot of money. They are spending a lot of money for construction activities. And we want to know whoever who is paid is the right person who is also complying to the government. Because let's say construction of the infrastructure, if the government is going to give you and while you are not complying, why? We have to look for people who are also, who have the patriotism. We want to instill the symptom of patriotism, and we want to give the contractors also the job of which they can perform to their full potential. And secondly, we want to make an audit trail. Let's say if you pay someone, input for someone is the output for other one. And if it is the output, is that output accounted for? So we want the government, everything to be streamlined and everyone to pay according to what is supposed to pay, according to his allied business. Yeah. Another one.
Question number 13.
Number 13.
Yeah, just go up. Just scroll up. Scroll up. Elizabeth, what is the current rate of alternative minimum tax and when is it effective?
Current is
0.5, yeah. It's effective.
Now we are going to
Question number
18. Which financial year is 4% SDL?
Sorry, I would like to.
When is the effective?
18.
Question number 13. When is it effective?
2018.
0.5.
Yeah, but when is it effective?
1st July.
1st July, yeah, 2020. Yeah, okay.
2018.
Okay.
When it was introduced.
Yeah.
Financial period starting after that.
Yes.
Number 18, which financial year is 4% SDL applicable? It is started from this year, 1st July. It is started from 1st July 2020. Clarify when the new payee and SDL, it is the same, 1st July 2020. The penalty for not notifying is huge linked to value of the subcontract. This is simply an unnecessary hurdle or snare for main contractors. What is it? What is its logic? What we want you to comply. If you want to do away with a huge penalty, you just comply and it will never get you. Which document should the bank provide for a taxpayer to be able to claim VAT? There is a periodic statement. These are the allowable documents for taxpayer to claim VAT from banking service. There is a periodic statement, and the bank, they are supposed to give you every on or before the 10th of the following month after the month of business, so that you can be able to prepare your VAT account and submit the return accordingly. Prior to 1st July, for services received from a non-resident supplier that attracts withholding tax, we could easily do this online on the TRI portal, where for the tin field, we used it to enter one and enter the supplier name manually. However, from 1st July, the TRA portal has frozen both the field for suppliers. So how do we go about this operation?
It will be better if we get communication with Hassan, so as we can make follow-up to make a immediate communication with our ICT people.
So, Mr. Hassan, we request you to communicate with us. You can use our tax consultation bureau or call center so that we can make follow-up to our counterpart, the ICT people. Then another one, anonymous, whether head office and the branch is related party for transfer pricing. Yes. Chandres, what if an online system is not working for payment of SDL, PYE, or any tax, and the taxpayer misses the due date due to faulty in TRI online system? This happened for June 2020. Due dates, what taxpayers should do? Adam.
I think in case of any issues which relates to operational problems, we advise taxpayer to immediately communicate with the regional managers, to which they always get the service. I think that is what they have to do. They have to report the incidents immediate to the regional manager.
Maybe to contribute on that, for the case of June this year, I think even on our side, TRI, we noticed the problem. And this was caused by the migration of our payment system, where we are implementing the GPG, moving from RGS. And therefore, in migrating the system, and actually it normally occurs in most cases, that when we are migrating from one system to another, such technical issues can arise. So the management is aware, and you should feel free. And I think very soon you will get notification. You should not worry about the penalty and the interest.
That's a very relieving news.
Yeah, Liston, is there any exemption of VAT or non-profit organization as they are not doing business? As it was presented by one of the panelists, that for non-profit organizations, if you obtain the charitable status certificate, you are entitled to some tax relief. But upon fulfilling the required procedures, you must meet the criteria. Just to mention a few of them, the NGO should be a resident entity, public in character, and it should be dealing with the projects which are for the projects regarding to road construction, health, water, education, yes. And also the Constitution should clearly spell out the activities if they are really meant for the public interest. So if you manage to fulfill the conditions, I think the exemption are there. And not only for that, it cut across other tax types, of which if you go through our various tax types like customs, yeah, you will see the schedules and the tables which are clearly showing what the benefits one can get once the procedures are met. Mr. Yusefa, will SDL monthly return submission be online? Yes. We are actually coming very soon. By August, I think we are going to roll out. If ceteris paribus, if other things are going to remain constant. Yeah, and not only SDL, but as we have said, we are also coming with pay, return, income tax returns, the statements for provisionals and final return, except for specialized industries like mining and mining and petroleum. Yeah, insurance already covered. So we are coming together with SDL and the others which I've mentioned, except for the two, petroleum and mining. But by end of this year, we will also have prepared the standard format for the two industries. Yeah, maybe I leave.
Question 26 is on about by Vijay, which says, can we have a standard format template for a transfer pricing policy? Well, Mustansir clearly concluded that there is no such standard format. Each entity would have its own unique policy. But however, if you want to understand what is there in a TP policy, I would highly recommend that you go and read through the transfer pricing guidelines, the recent ones that were issued, and it would give you a guide on what exactly is required.
Question number 27, Edwin Lema, do the proprietor have to pay the tax debt when he is no longer able to proceed with the business and want to cease operation? I think Mr. Mustafa said the Caesar should.
You pay the Caesar.
You pay the Caesar what is it?
Dawa ya deni ni kulipa, au sio?
Yeah, dawa ya deni ni kulipa deni. Yeah, so long the debt is existing in your system, we cannot forego it. You must look for best way. And the best way is to come to TRA and make arrangement for liquidating the tax liability. Yes, yes. And once you foresee that the company's operations are not in good health, it's good to notify the nearest TRI office. Yeah.
Question number 28, it says a company in Tanzania is receiving the items from two different related parties. In view of this, do we require to prepare a TP policy separately or for them, or combined is enough? You as a Tanzanian entity, you will be required to have just one transfer pricing document that will cover all your related party transactions. So you do not need to have two separate policies for each transaction separately. And to add on to that, previously there was a question which said that I had not submitted my TP certificate. Should I be worried? Now, it's not a TP certificate, it's a TP document. And that too, if your transactions have exceeded 10 billion Tanzanian shillings during that year, you were supposed to submit, or you would be penalized a penalty of 52.5 million. But in case if your transactions have not exceeded that amount, then it is required to be submitted to the Commissioner General within 30 days upon request for that document.
On the software, what if we have not deducted withholding tax? Because we purchased it in 2019 and I will confirm how we treated this. Do I need to still file the withholding tax? I think the more important issue here to know is that was you obliged to withhold? That's the first question you need to ask yourself. If you had that obligation to withhold and you have not withheld, you have to withhold. You have to pay that withholding tax to the commissioner. I think that is straight. The other question, for the companies which are under EPZA and enjoy the exemption, which tax has been removed this financial year? Is this a general rule for all companies or certain industries? For the company, which is the pharmaceutical industry, are these changes applied? For the companies which are under EPZ and enjoy the exemption, which tax has been removed from this financial year? Is this a general rule for all companies or certain industries? For the company which is the pharmaceutical industry, are these changes applied? He's talking about the changes of 2020.
Maybe I'll chip into that one. The exemptions that have been removed in the 2020 Finance Act is not on EPZA. So we need to clarify that. It's on SEZ, that is Special Economic Zones. So there are two different type of incentives in place. One is EPZA, that's for export processing zones, and there is SEZ, Special Economic Zones. So the Income Tax Act had exemptions for both SEZ and EPZ. So the current removal in 2020, which my colleague Hussein was talking about, was exemptions to the SEZ who do supply 100% locally, as compared, so those who don't know the difference between EPZ is for exporters, SEZ for those who are selling locally. Now, the reason why that exemption was actually removed, or would I say abolished, is to ensure and to allow the local market to compete on its own. Because if you give SEZ a full corporate income tax exemption and another industry who's supplying locally is paying corporate taxes, it was causing an unevenness. So there was some reforms towards that. In terms of the pharma company, the pharma industries, there are specific tax holidays that are given and reductions in corporate taxes. So those were earlier presented, and then under the second slide, we'll be sharing those. And what should be reminded is it's not to an infinity. These tax holidays are not on infinity. They are expiration periods. So the corporate tax rates were reduced for the pharma industry.
Sorry, let me just add something. For the SEZ exemptions, it's actually for, just to make it very clear, if you read the Finance Act, it says Class B SEZ, where Class B SEZ is actually SEZ which sold locally and within the territory state. So if you sell within Uganda, Kenya, and the rest, those are the ones that are actually exempted, are not supposed, the exemption is actually removed from the corporate side of it. So please, whenever you read it's Class B, remember Class B license is for local and those who sell within the territory states.
Ian Ludovic, taxes applicable on content purchase, example, users who buy contents from apps, games, movies via, say, virtual cards linked to mobile money. What is the implication, as well as what's the implication as well for the mobile money operator? I think this is the one area of the challenge in taxation is taxation of digital transactions. That you are at home, you download apps, games, movies, and you make straight payments. And it is worse, it's more worse when you make these transactions with the foreign companies. So this is one of the areas of which, if you look at the rules of taxation of VAT, these transactions are taxable as far as the customer who enjoys these digital services in United Republic. But the challenge what we are facing now is how to track these transactions. Among of the issues of which which are in place to come up with a specific regulation on this transaction, it is still underway, is in this area, especially as far as VAT is concerned. And the taxation of this area, it's all about VAT because we are talking about the buyer. It's not all about the income tax. So we are still working. The TRA will come up with a regulation on this area on how to tax these transactions. I think if Mr. Mayo have something to add.
Maybe, well, I can also chip in on that. It has been a challenge actually to tax the digitalized economy. And and this now is applying across different sectors. If you go to the transportation sector, you can find we do have this like Uber, like whatever, Bolt, and so many false. But if you also come to the to the entertainment, movies, and other sectors like the tourism sectors, nowadays you don't need maybe you can just book online and get an accommodation and whatever like that. Yes, the Airbnb and the things that are but we are. As my colleagues say, we are to establish that, and the technical team now is in place and thinking on how well can be taxing that. And some of the recommendations have been taken into considerations, and you can see these guys need to have their representatives in this country at first. So we are thinking of moving forward from that. For instance, if we can have like agreement between us and the business holders on how best we can really have to track their business. For example, you cannot track some of the transactions. For example, these companies sometimes they're also making a transaction with other companies online. For instance, Uber can make a business with a Google Map, but that transaction cannot be actually captured. So we are still thinking it's a challenge, and it's not only in Tanzania, it's all over the world. So it's a sector that we really need to put the hands together in order to see how best we can get into that. Yeah.
Just to add on that, as my colleagues say, I think the challenge is within VAT Act, but for the income tax, we have source rules under Section 69, so that that transaction can be well captured, and there should be a problem because as long as the payer of that service is registered, so when making such a payment to the service provider, he shall withhold the tax. So for the income tax, it's not a big challenge. The challenge we have is for VAT. Yeah. So if that guy is making if Mr. Ian Ludovic is making a payment to a service provider who is based outside the United Republic, he has to withhold the service by the rate of 15%. And if the provider of the service is within United Republic, then the 5% rate will be used. That's it. Thank you.
32. Zero.
I understand. Okay, the question is that in Tanzania, TP regulations, commodity transactions have mentioned that the cup method being the appropriate one. I would wish to know how this would be applied in the sectors like coffee, with which in Tanzania the pricing is tricky and there is limited access to the international price quotations, and price comparability from the global regulatory bodies are generalized. I would like to answer to this question that, you see, the TP regulations were introduced recently, and with that, the Revenue Authority is as well updating it on a regular basis, as well as other stakeholders are also improving their reportings. And we hope that the Coffee Board, the Tanzania Coffee Board, would as well provide various reports which would give you the information that you require, so that it would be easier for you. Yeah. But otherwise, you have to use the cup method. No option there.
Anonymous, question number 33. Withholding tax on software, example, antivirus licenses. So if I'm paying MCAFE online, say $100 US, they will not accept me deducting 15% withholding tax. Does this mean I then pay 15% to TRA or $15 as withholding tax on behalf of MCAFE? Second question, with the online system of withholding tax, how do I fill out as MCAFE does not have a TIN in Tanzania? The issue of whether to withhold or not, the issue of obligation, if you have an obligation to withhold, whether the person who has supplied such a service to you has accepted or not is not the issue under the law. The issue here, if you have an obligation to withhold, you have to withhold and pay it to the commissioner. The issue of acceptance by the person to whom you make payment is not concern of the law. The second question, with the online system of withholding tax, how do I fill out MCAFE does not have TIN in Tanzania? I think we have to communicate on this issue with the regional manager of which you get the service. If there is no, if you cannot complete that transaction unless you have a TIN of non-resident, I think there is, maybe Mr. Malia, you can chip in. Otherwise, we can communicate with the.
Yeah, thank you, Mr. Kobelo. I think in case the TIN, the MCAFE does not maintain TIN in Tanzania mainland, I think we normally have each regional manager has got a TIN in his region. Yeah, so I think if he can liaise with the nearest TRI office, he can get a corresponding TIN just for the acceptance of the payment. Otherwise, since now the law allows the appointment of the representative, I think there is a need also to communicate with our fellow suppliers abroad for such arrangements to have a representative now in our country, so that we can smoothen the process of clearing services and goods if at all it happens, in order to minimize unnecessary delay or failure to have what you require from the outside, from abroad. Yeah. Let me quickly go to question number 34. Kindly expand and clearly define the exactly ancillary transport services, because transport and logistics is wide. It involves road, water, so forth. Secondly, in situation where your input VAT is more than output VAT for a period of 3 years, what remains available on claiming? Thirdly, what are the taxes associated with logistics firms providing transport services that are from Dar es Salaam port to nearby? I think as ancillary transport services are those who are making logistics for shipment of the transit goods in most cases. I think VAT, I don't remember, I think it was VAT Act of 2014. Yeah, it provided zero rated for them. Yeah, previously we were taxing because the transporter, the carrier, was not even knowing the person where is delivering the goods. And the company is locally registered. So by then, according to the law, they were supposed to pay tax and claim refund in the usual process. But since the change of the law in 2014, then they are actually rated as zero rated for the services they are providing. Now, the second question, the input tax is outweighs the output tax, and therefore, and the period is 3 years. Now, why should he wait, Mr. Evans? Why should he wait until 3 years elapses? Because the refunding scheme requires you to apply for refund for every 6 months for regular payment. And if you are not, then we can, if we are dealing with the exports of exports and mineral, we categorize you on monthly basis. You can apply for refund on monthly basis. And now, I actually, under normal circumstances, you cannot tie up your input tax for 3 years because you are actually crippling your working capital. So I think we advise you to claim your refund after every 6 months, but you should make sure you have all supported documents. And for VAT, we have emphasized the support document should come from the EFD machine. Clearly showing the TIN, date, name, VRN, and the description of goods should be clearly shown in the EFD receipts. Thirdly, what are the taxes associated with the logistics firms providing transport services that are from Dar es Salaam to neighboring countries? The normal taxes are applicable. Income tax, VAT, employment tax, stamp duty if there is any agreement. Yeah. So all, just like any other registered taxpayer, you should comply with our taxes laws. Yeah. Question number 35. Yeah, the aim of creating the withholding certificate online is to minimize the paperwork. Yes. Is there any need to print and submit the final return as TRA can have access to the system? There is no need, as you have said. Each one can view the certificates, and the TRA is the one owning the system. So you don't need to print the certificates because they are reflected in the respective taxpayer's account. Just curious, what will happen to the person with more than 20 withholding certificate, especially consulting firms? Mr. Kubelo?
Yeah, I think as one of the way to minimize paperwork, as Mr. Malia pointed out before, and the Commissioner General also pointed out to the same issue in the joint seminar between TRA and NBAA, that e-filing is underway of the return of income tax. So we do expect that with e-filing, all the attachments which are required to be accompanied by the return will be online submitted. So we do believe that there will be need of those to print out of those 200 withholding tax certificates. As now withholding withholding returns are filed electronically, we believe that once we will be filing return of income online, definitely all these certificates, there will be no need of printing all those 200 withholding tax certificates.
Yeah, question number 36. We paid a subcontractor bill amount with VAT, but did not receive EFD receipt. What should we do with the invoice at booking time? The question is, Mr. Kumar, is very straightforward, that you cannot claim any refund without EFD receipt. And that is the law. So I think you must insist the subcontractor to provide you with the EFD receipt if you want to claim the refund. Otherwise, that transaction is null and void.
Thank you, Mr. Malia. We final? Okay. Let us answer the last question, number 37.
Yeah. Question number 37, how does capital gain tax work? If a family member gives you share in a company as a gift, is the gift taxable? First schedule of the Income Tax Act provide for amount derived as a gift, that's which is exempt. It is not the transfer of shares from one member of the family to the other member of the family. It is a gift in the context of the first schedule of the Income Tax Act. So if a family member gives the other family member the gift, the rules of determining if there is a gain on that transaction will be applicable. And if there is any tax within the transaction, the tax will be paid. Because under the law, if you allow such kind of a transaction, there will be a lot of arrangements that will be made between the family members so as to skip from the tax obligation. So there is no straightforward exemption on this kind of transaction just because it is made between family members.
Okay, thank you. As we have seen, there are more than 130 questions that have come through, and we've only managed to answer 1/3 of it. And especially it's a Friday, very many people do want to go and start enjoying the weekend. So what my suggestion is, we are very pleased even with the type of questions that have been asked. We can clearly understand the taxpayers are very, very keen to keep their compliance house in order. And TRA is also extremely pleased to see these questions coming in, especially one of the questions that came was on digital taxes. So we can see that taxpayers are thinking ahead of time. So what we will do, and we still want to remain connected with all of you. So my suggestion is that we have taken all these questions. over this weekend, the team is going to start answering the question and possibly upload the link for you, and then you can review the answers, you'll get the responses, and you can play the video at your own convenience. So with this, I think so we are already at 6:30. So for more questions, for more answers, for more questions, you can still send us the question even by today evening. So we'll compile everything and then share with you through the social media and even through the WhatsApp link. And for time, as time is short, I can only tell you kwaheri, and we meet again. Thank you very much.
And we're out.